Hi, and thanks for tuning in for this quarter's Student of the Market Update. My name is Bjork, and our role is to serve as the independent investment fiduciary advisor for your organization's workplace retirement savings program. Welcome to the third quarter 2024 edition. Hard to believe summer's over. Let's dive right in and see how the markets have been treating us so far this year in 2024. So, biggest story and the one we probably feel the most is that stocks continue to rally throughout the year, although with some recent volatility and a tough week here in the first week or two of September. Bonds, however, have continued to lag, and that's something where a lot of investment professionals and investors have been excited that there's now income in fixed income in bond investing, but bonds have still continued to lag. So interesting to see how that'll play out the rest of the year. Important to note, if we look at the next slide here, though, that core bonds historically have also provided that diversification or protection during stressed markets. Now, that was not the case in the most recent bear market, where stocks and bonds, really, fell off together. But for long-term investors, important to note that the role of bonds in helping diversify and decrease volatility for the long term. So certainly something to keep in mind as we hover here around all-time highs, right? So if we think about how the markets have performed, growth and the Magnificent Seven, then the Fab Five, and the concentration of growth stocks was a big story last year and into this year. This year we've seen small cap and most recently value outperform. And it's interesting to see that market leadership transition. It's also interesting to look to see that when value does rally and outperform growth, it does tend to be historically somewhat durable. So interesting to see if that trend continues this time, but certainly a bit of a shift in market leadership when it comes to the stock side of the equation. When we think about where the market is today, it's easy to forget that we're in a very young bull market, right? So we were in a bear market in 2022. And so when we look at the data here, we can see how, young bull markets have historically played out over time. And, we're in pretty early innings of this one. So easy to forget that fact, and certainly something to, kind of help re-anchor ourselves in terms of where we are in this current market cycle. When we look at how asset classes have performed so far this year, Morningstar slices and dices about 113 of these. So, the overwhelming majority of asset classes have been positive this year, with only 5 of them being down, so 4% of asset classes. So, a really strong year in 2024 so far. But again, some recent volatility, maybe a little nervousness in the market, and with the election coming up and with the Fed, sort of hovering around, potentially cutting, and when will they cut and by how much will they cut? The markets are a little bit nervous. And so, so again, important to, look at where we are, have that long-term perspective, but also understand that, these things don't typically go on forever. So speaking of inflation, if we look at especially shelter cost, this most recent inflation print, it really started to drop off. So inflation is, darn near, depending on how you calculate it, about 40% of the inflation number. We're really starting to see inflation fall off, how the housing and shelter costs fall off. So really important data, and I think one that maybe hasn't been talked about enough. So just an important inflation nerd update that we're really positive to see that shelter number's fallen off. Finally, we talked a little bit about the election, but just really important to emphasize, we're all going to be caught up in all the news and all the, everything that comes with this election cycle. But really important to note that, frankly, the markets just don't care who's in office. They really don't. The markets care how long you're invested and how much risk you take. That's really about all the markets care about. They really don't care who's in office, as is evident by the slide here. What if you only invested with your favorite political party? So, just important to note, to the extent possible, it does help your investing, acumen to potentially tune out some of the noise if you can. So finally, let's just really hit on diversification. We talk about this slide a lot. We've covered this slide a lot. Diversification, it never feels good, but the punchline is, it really tends to serve long-term investors well. And so, we're talking about all these narrow asset classes, but really important to not forget the core foundation of being a long-term investor, especially in a workplace retirement plan is being diversified, right? And not putting all your eggs in one basket, right? Or, betting everything on one horse. So with that, thank you so much for your time. I'm going to put some important disclosures up on the screen. Again, the goal of this series is to inform the important decisions you're making both in your workplace retirement savings plan and beyond. If we can be of further help, please track us down. Look forward to connecting, and thanks so much for your time. So long.